Welcome to PreciousMetalsInvesting.com. My name is Ted Sudol, and I have the pleasure of having as my guest today Charlie Nedoss. Charlie is the senior market analyst for Lasaalle Futures Group. Welcome, Charlie.
Hi, Ted. Always nice to be with you. Kind of crazy times that we've been in. Some big moves in the marketplace over the past few weeks.
Really big moves and a lot of craziness. We haven't spoken since before the election. Some people still dispute it. I think it's pretty much settled, but some people still are fighting about it.
Right. We have seen it, and you know, again, the kind of news flow on that has gone back and forth. But I would tend to agree with you. It seems to be they've exhausted, a lot of the different remedies in court. And if you look at how these cases have come to court, I guess there's a couple of things that you need when you go to court, and one of them is evidence. And right. I don't think that we've heard a lot about voter fraud, but we have not seen any evidence of it. As a matter of fact, today being December 8th is when everything is supposed to be certified. So all the different secretaries of states and the governors have signed off on this, and it looks to me like, again, I think, the court cases may go on, but I don't think that we're going to see any type of a change. Or I guess if you look at another way, I guess you will see a significant change where you'll see a change in the administration and Biden will be the president.
One of the things that I've read is that Trump is actually making more money now in disputing the election than he was making as president because he's basically set up the legal defense fund, so the majority of money goes to him and can be used for his personal expenses. He's kind of happy with things as they are.
Yeah, I mean, in terms of fundraising, I did hear, and again, this is I can't quantify it, but I've heard that he raised somewhere between $200 and $230 million so far post-election.
Right.
So where that goes, I have read other accounts to kind of verify what you're saying, that there's not a lot of purse strings attached to that, and that he could use that for past defense, for future defense, quite frankly, any way that he deems fit to spend it. Yeah. I think a lot of this, though, Ted, I think would be if we didn't have the situation going on in Georgia and the makeup of the Senate, that this point would be moot. But I think right now that you're seeing a lot of, silence from the right, just in terms of they want to get through this election. And I can see why the two Senate seats are very important, seeing as it's going to determine the makeup of the Senate and who controls the Senate going forward. If the Democrats were to take two seats, it would be 50-50. If the Democrats take one seat, if they were able to get one of the Republicans on any issue to come over to their side, then the vice president would be the ultimate vote in that. And again, as it's a tiebreaker vote exactly. And as we've said, it looks to me like Joe Biden is going to be inaugurated on January 20th. So I can see why we're going through this, but I don't think, again, anything is going to change. I think this is just a lot of posturing for the Republicans to try and retain those two seats in Georgia. Quite frankly, bridging that back over into the metals trade that's made for a very choppy trade for the dollars kind of had bits and starts to try and rally. But if I look at the chart, the dollar is still in a downtrend. I perceive the dollar, again, to be under pressure and to be under continued pressure as we see more stimulus packages coming, not only the one that's being currently debated, but further down the road. I think you're seeing the debasing of currencies kind of across the board or across worldwide, which I think eventually is going to put inflationary pressures on goods. For instance, we've seen car sales pick up in a big way. We've seen used car sales pick up in a big way. We're getting to the point now where our car production, our car demand is starting to actually exceed production. And I think a lot of that has to be with the COVID-related constraints in a factory. And I don't think that the auto industry is the only industry that we're going to see that in. So right now we're in a time of easy money. I think it's only going to get easier, or loose money, however you want to call it. Interest rates very low, practically free money, in terms of where interest rates are at. And I don't think, again, because of the COVID restraints that we're seeing, you're seeing a lot of limits placed on manufacturing. And eventually, when we do come out of it, which I do have hopes that the vaccines will help us, it's going to be quite a period, but we could actually be setting up for the textbook definition of inflation of too many dollars chasing too few goods.
And I think that you're right in your analysis of coming inflation. I'm just not sure, because it seems like there's a lot of evidence that down the road the economy can't support what the Fed has been doing and
right.
What everybody's been doing to push up asset prices. So sometime I think the bell is going to ring and things are going to drop.
They are, and you will see, and specifically what I'm talking about, Ted, is if you look at food inflation, you look at energy prices. When we went into the fall, we were at $60 crude. Quite frankly, I never thought in my lifetime I'd see negative crude oil prices, but crude has recovered quite well. And we're trading back up into that. I think the high of the last move here was in the high 47 area for crude oil. Mm-hmm. So, you've seen a lot of U.S. producers, again, as a function of financing, go out. So we have less people producing. We're going to start bringing back demand. We've already seen demand, starting to pick up from, the COVID lows. So as the nation does start opening up, again, I think you're going to see that demand for energy, but you're not going to see it met with as much production, at least production out of the U.S. end. You're also starting to see, OPEC, again, they did limit their production cuts to another month to 3 months. And again, they kind of see the writing on the wall just in terms of, is U.S. production going to come back? If U.S. production comes back, how they're going to compete for it. And it's all about market share. So I think at this point right now, they're trying to buoy price by rationing the supply. Mm-hmm. So you have seen some of those constraints set up, I guess artificially, with quotas. But again, I think that we start to come out of this in another month or two, and we start to see the mobility numbers come up. I think you see crude follow, and I think you see gasoline follow as well.
And as we discussed in the last episode, with some of the miners, there is constraint on supply because some countries have closed their mining operations. So there is going to be a lot of inflation.
Yeah, and those comply exactly, and I think that's very astute to point out that the supply constraints that I'm talking about aren't limited to just manufacturing. They definitely, you're seeing the mining sector, feel the brunt of it. And I think that's what brought copper, up to its highs. So, again, with COVID, we're, just affecting really every industry and every, means of production out there, I don't think that the mining industry is going to escape that either.
I agree with you.
Now, on a technical basis, Ted,
mm-hmm.
This is kind of interesting, in the sense that we really spent the back half of November consolidating, and I think a lot of that was the market just following what are the implications of the stimulus. Stimulus, I'll call it the stimulus off, stimulus on game that we've gone through ad nauseum. And I think that started to, again, weigh on gold. I think technically we had back in November when we put in the most recent highs, we had a big outside day. We came through all the moving averages except for the 200-day moving average. That was on November 9th. We spent the next really, 2/3 of the month consolidating and finally giving it up on November 23rd. And we came in, and on the 24th, we took out the 200-day moving average on the downside. Again, at this time, I think you were seeing a lot of people exit ETFs. You saw a pretty good portion, well, you saw a good liquidation of ETFs. Market spent about a week below the 200-day moving average and was able to find some legs in the 1770 area, which was the top end of a consolidation phase from back in June. Spent a few days below the 200-day, well, we spent actually about 6 sessions underneath the 200-day moving average. Now, more recently, late last week, we started to reclaim the 200-day. We spent the back half of last week just consolidating above that. Yesterday, technically, was a very important day to me. Again, it was an outside day. We put in a new low, we put in a new high, but I think what was really significant in yesterday's trade is on the downside. Once again, we tested the 200-day moving average. All we did is attract buying. And on the upside, the prior session's high had been the 20-day moving average. We powered through the 20-day moving average, which that was in really about the 1850 area, and proceeded to rally about another $20 to $25. Today's price action, we have a higher high, we have a higher low, we closed higher on the day. Just near term, Ted, the near term resistance I see is the 50-day moving average line just above the market at 1886.20 today. I think that's an important level. I think we can close above that level, especially this week. That sets us up for a test of 1924, which would be the 100-day moving average. So all in all, I think gold had a pretty big sell-off. I think we spent some time underneath the 200-day moving average. I think it's very encouraging that we did take that out, and we spent a few days consolidating on that average. And again, yesterday's trade I thought was pretty significant in the sense it was a reversal day. It was a reversal day finding support on the 200-day moving average. Further, the 10-day moving average on that break did trade below the 200-day. It is hooked now and is actually forming a bullish crossover where now we're starting to see the 10-day moving average with today's price action trade at a level above the 200-day, which is generally a very friendly signal.
Charlie, do you also follow silver?
Yes, I do.
Okay.
Yes, I do. And the silver.
Yes. Before I came on, I looked at some of what they're currently saying on places like Keiko and Silver Doctors, and a lot of them have titles like "Forget about gold, focus on silver." So, do you see the silver technicals being stronger than gold? How do you see that?
I do. Silver relatively held up well if you want to compare that with the 200-day, the gold washout under the 200-day moving average. Silver on its lows came really $1 within that. I believe the low of the move in the March silver was around 21.77. 21.07 represents the 200-day. If I look at, though, this week's trade or even the late last week's trade in silver did rebound faster than gold. Silver came up to the moving averages. It spent 4 sessions really consolidating on the in between the 10-day and the 50-day moving average. But on a closing basis, Ted, it never broke far away. I mean, a few cents away from the 50-day and the 20-day, which are really about the same value right now.
Right.
With yesterday's early weakness, we saw that same chart formation, Ted, where we saw the outside day where we took out, really in silver, we took out 3 days of lows and 3 days of highs, closed higher on the day. We found support on the 10-day moving average. We were able to close not only above the 10-day, the 20-day, and the 50-day moving average yesterday, and followed through and put in a higher high and a higher low today. Silver, I see resistance, first big level of resistance up above at 25.30. But I think if we get a close above that level, that we could see some more technical buying come in. So I view silver, I think silver could have a bigger move than gold, Ted.
Charlie, I really appreciate the time that you've taken to speak with me today on preciousmetalsinvesting.com. I know that you have some health issues with your family that you are also dividing your attention. But could you speak a little bit about yourself, about your strengths, and about Lasaalle Futures Group?
Yeah, I'm a veteran in the futures industry. I've been in the industry for about 30 years. I focus a lot of my attention on the metals markets, as well as the indices and grain markets. I do a lot of work on options and option strategies. And in terms of Lasaalle Futures, Lasaalle is a boutique brokerage, and by that, what I mean is we have a broad base of clientele ranging anywhere from an individual speculator that wants to get on and trade online to an investor that wants in on the option market and wants to work one-on-one with an individual, carving out strategies, identifying opportunities and managing risk. As well as, Ted, I have clients that are farmers that use me as a hedging mechanism, as well as people in the energy industry that use me for hedging as well. So kind of a broad base of markets, a broad base of clientele. We put a lot of pride in the work that we do in terms of technicals. And, as I did mention before, I do a lot, and especially with a retail investor, a lot of limited risk option trading.
If someone wanted to get in touch with you to discuss some of the strategies and some of the ways that they can work together with you, what would be the best way to reach you?
They can reach me via phone at 312-818-1895. I'm sure you would have a link on here on the podcast, Ted, but I can be reached at via email at cnedoss@Lasaalle Futures Group.
Okay, and I'm sorry I interrupted you. You were going to say something about Lasaalle Futures Group.
Oh, no, I was just going to say that Lasaalle Futures is located, I'm in Chicago. I'm in the financial district in Chicago. I'm located in the Chicago Board of Trade.
Well, thanks again, Charlie, for being with us today. And thank you for taking time out to talk with us, especially in light of your father's condition.
Sure, Ted. I always like talking markets with you, enjoy the forum, and look forward to coming back and discussing metal markets with you.
Okay. Have a good evening.
You as well, Ted.
Bye.
Take care.